Crude oil daily forecast, April 8th, FXEmpire.com. As you can see, the late sweet crude market fell during most of the session on Friday after it was announced that the United States only added roughly 80,000 jobs as compared to the 160 or so they were expected to. With that being the case, risk assets in general sold off, and the lane sweet crude oil would have been no different. However, you can see that we reached the $92 level and bounced significantly enough to form a hammer. And this, of course, is a supportive looking candle. With that being the case, we think buying a break above the top of the candle and more specifically the 94 level, as there's a little bit of noise here, should lead to a move up to about 96 before running into significant resistance. Up there, we'd be a little bit leery. We think this market's trying to find some type of range for the summer, and based upon longer term charts, could even be trying to break out of a symmetrical triangle, which of course means we don't know which direction it wants to go. If we manage to break down below the 92 handle, we think that makes room for a move down to $90 rather quickly. Over in the Brent market, you can see we had a completely different scenario as the market just went straight down. There is a significant amount of support on the longer term charts down at the 103 level, and if we get down there and break below it, that could be a very bad sign. We think ultimately that's probably going to happen. But 107 could be an area where we try to bounce back to. We figure there's a lot of supply there. There could be quite a bit of selling. Brent is tied more to Europe than it is United States, and since the U.S. is still where everybody is pinning their hopes on, even with the dismal jobs number, it makes sense that Brent will do far worse than the light sweet crude markets. Below 103, we're aggressively short. Otherwise, it does look like this is a nice opportunity to sell any bounces.